peoples. Bruce with Targeted Wealth Creation. It is Tuesday evening. Another what a day in the markets. Don't want to say I told you, uh, but I told you. And I don't expect March to be good. I just don't know how much further. Take the SPY. The S&P 500 sold off a lot more than the NASDAQ did. The NASDAQ sort of came back. So, in a lot of the high tech and even a little in crypto, it could have been a lot worse. I do think we're close to bounce levels. We went down in the S&P to like 5700, 5710 something, and that was a bounce point. I think we could easily see 55. So I think if we bounce and we recover, it's sort of a fake out, then we have another further drop. So March could be ugly. I've been saying it could be. I'm hoping it's not, and we may have seen 90% of all that we're going to see in the downdraft. There may be 10% or 15% more left in the month after bouncing up and then going down. And that's what markets do. When markets are topping, they can trade sideways, go up a little more, have a couple steep drop days, bounce. So hang in there. You guys that are on heavy margin, those are the ones I worry about. If you're already in high risk crypto, you know, these lethargy and a lot of that stuff, and everybody sees it positive. Yeah, when the Nasdaq's running and big tech's running, there's nothing better. Um, but it's easy to have a comeuppance. Easy, easy, easy. So just be careful out there, guys. All right. So what I got for you today is Kurv. There's a few people that love it, that really know it and watch it. I'm one of the few reporting on it. There are a few other people, but I like to constantly keep up with it because I like Howard Chan. He comes from a more conservative yield background, PIMCO, BlackRock. Not that BlackRock is all conservative, but they're big. So what I've got for you is Tesla. I reorganized this because I was taking it from the bottom and going down to the top. And I thought, I want to show what's ahead and highlight what I'm reporting on. Again, think of TSLP as it is Tesla equivalent for Yieldmax. And both of these report monthly. And if you want to think about, group A that Tesla is in, this is just in week one of Kurv. So they don't call their group names, but they do have weeks. And in week one, their TSLP is the only one that reports. And then next week, Netflix, right? NFLP versus NFLY. And then there really isn't an equivalent of KQQQ. It's a portfolio big tech. Tech Titans is the name of it. It's more, I wouldn't even say it's equivalent to, maybe it's equivalent to some of their biggie, eh, that's out, that just reported. I'll do a distribution on Biggie and Soxy, which is the semiconductor focused, and those they do buy and hold the stocks. Now Curve can do it either way, just like Yieldmax can. Curve sometimes buys the underlying and writes these calls. Sometimes they use synthetics, but they go out longer. They go out a month instead of the weeklies, and they're eligible to use spreads as well. I think Neos actually does their um, underwriting the way that Jay, with his firm, does it for Defiance and does it for Yieldmax, the option. Zega, that Jay is with. Um, Co-CEO of that. So anyway, where I'm going here is be careful out there in the markets. Look at this drop. I mean, it's not immune on the other side of it, because I'm going to do my analysis again updated. I've been doing it for a long time, but I decided typically I do 3 months, 6 months, and 9 months. I look at yield, I look at NAV loss or gain. I add those two percentages together and I get total return by 3 months, 6 months, and 9 months. Well, what I want to do is pick up on trends sooner. So I've added a 1 month column. Now, I'm not doing it here, but I am doing it in almost all my other analysis. But what I'm doing over, I'll show you in just a second. So 70 cents is what they paid. You can see that that's down from a dollar previously. And then the time before that, I think it was $1.30. Okay. And look at the stock. And that's what's going to happen when your stock goes down, because you had a 45.90 yield, you have a 45.73 yield. So you're yielding IV or so, and the stock has dropped $8.42. So let's go over to monthly. What I did, this is where I was tracking last year, and I was using all this stuff to help me understand how they were doing on 3 months, 6 months, and 12 months. Okay, I still have some of that, but I thought I would go out and make a clean slate, because a lot of the Yieldmax people will say, yeah, but now we're using spreads, and before we just had synthetics, were just long call, short put. And now we can actually and before they were just long call, right? They would just buy a call. Sorry, they would sell a call on their non-synthetic, right? And when they sold that call, say it was 8% out of the money, well, if that underlying went up 20%, they got killed, because that took a lot of money out of the synthetic, which the synthetic is selling the put, buying the call. It's like owning the stock. It's a pure long play. So you lose a lot when it goes down, you make a lot when it goes up, but that selling a call only, that neutralizes it. If it runs up 20% and you only sold 5% out of the money, you lost the other 15%, and that takes away from your synthetic that got 20, right? So you only gain 5% maybe a net for that week instead of the 20%. That's why people always come out. Everybody says, whatever your yield is in Yieldmax, if you bought the underlying, you did better. Well, you did if it's a big mover. And anybody that goes up 30, 40, 50% in the course of a year, yeah, Yieldmax total return is not going to be equivalent to the growth stock. And I know some of you guys only want the income, and maybe you don't know how, especially you don't know how to do options, then you're giving it to somebody else, paying them 1%, and there's nothing wrong with that. But I think you can mix. So what you're starting to see, I know it's not really a rant, I'm just trying to educate here. So what you're starting to see is Yieldmax, you're starting to see other people deliver a mixed, and they're calling them target. Look at Biggie, okay? What is Biggie? Well, it's targeting 12%. So we're going to pay you 12% every month. I mean, generally speaking, if the whole market crash and they can't make any with options, then they can't afford to pay you the 12%. But the idea is we're only going to pay you 12% fixed, if you want to call it that, but they still have to make it. And then we're going to own the underlying. So they're really writing calls against the underlying, or writing spreads or so forth. Whatever they can do by owning the stock with the option that looks best to them. So you may be able to participate more in the upside. Now, frankly, they ought to do that on some of the really high volatile, but they're doing it on a little bit of the more conservative, big cap tech, but not the micro strategies, and not the Teslas, and not the Nvidia. So let me jump to this. So what I did over here is I said, let me just do year to date, right? That's 2 months plus. And I summed all of these up and I said, okay, this is what I've been doing. I'm going to show you over here to the right in a minute. So here's Tesla, right? TSLP for Tesla. $1.30, told you that, then a dollar, now 70. It's the only one in March that's now reported. So it's got one more distribution than its equivalent Tesla, which I'm going to show you out to the right. You can't see it yet. but I just wanted to bring you up to speed on what I'm doing because I put in my thumbnail and everything. Then I'm going to do analysis. Otherwise, all of these funds, except there is no KQQQ in, it's closer to Biggie, it's closer to, I would say, Yieldmax, but Yieldmax has got so many in there. It's not really that. But I did want, so I've left that, there's no comparison out to the right. But just so you can see, since this is TSLP, then you have your three distribution. So, and then what I always do is I sum up. Okay, so I want to go year to date, right? So here's your last payment. We're trading at 1990. They paid 70 cents. You can think of yield on cost, right? Of the current price is 45.73. Pretty in line with last month at 45.90 and then 48.95 in January. But here's where I think it gets interesting, okay? Is this is where I want to do all my analysis. So what I'm doing, and I make a note here. I'm going to show you who is best, right? Who's the best fund given an equal pair for year to date. And when I do that, I want to give you one caveat. And that's down here at the bottom. But let's stay focused. So year to date, this isn't annualized, this is just actual. It's got one more distribution, okay, than Tesla does. So year to date, it's three payments total up $3, with the last one being 70 cents. So that's an 11.20 yield. What's the gain or loss on the NAV? Oh my gosh, what did I tell you? They were down $8. Well, it's $9.07. Okay. When you look at the year to date NAV, it's ugly. It's minus 31. But look over here. Who's worse? Tesla, minus 32. Right? So they lost $4.36. It's a much lower price, been beaten down. This guy lost 907, but it lost 907 when it started out the year at 28.97. These guys started out the year at 1346. So all I'm saying to you is you have to do this. So right now, I go over here and say between these funds, who's the winner? Well, math wise, when you look at 20 minus 20 is better than minus 22. So I give the win to Kurv. However, they only have two distributions. So if I plug in 34 cents, which would be awfully low, they're still winning. But what happens when I plug in 35 cents? They're still losing. So look at my note. If Tesla March distribution is greater than 35 cents, now I'm going to give it 36 cents. You know, you can do a what if in Excel and Google Sheets and on the analysis. Then it's tied 3-3. But as it is, it's 4-2. But I would say the odds are pretty strong. Although if March is continuing to be ugly, I mean, what did I do in my estimate? I haven't done the estimate for this. I'm still doing this week's estimate. So we shall see. If I recall, Tesla's in Group A, and we got another week or two before that. So anyway, that's how I do that. I tried to highlight total return. All right, let's continue because I promised this in my description and thumbnail. So Netflix, right? So in Kurv, it's NFLP. You guys know most all the time, all of the Yieldmax end in a Y. However, these guys got there first. MSFY is owned by Kurv because that was one of their early funds, and they beat Yieldmax to the punch. They just didn't have the capital to grow like Yieldmax has. Kudos to them for having so many offerings. Um, So MSFO is our signal, but let's go through them then one at a time. So this one's up in the air and could flip, right? If this one flips, which is, I'd say it's about an 85 to 90% probability that they pay what I said, 36 cents or more. I think if I had to guess, I'd say around 50 cents, but we'll see. Okay. So this one's up in the air. What about the Netflix ones, as I brought up? Well, you got a 3.2%. Wait a second. Wait a sec. Oh, sorry. Um, 804 total. So what's that total consist of? Well, it consists of a 482 yield, right? It had some nice payments. Now, these are all paired together. They're both just February. Nobody in March yet on this field has a distribution. That could change soon, right? But I'm just telling you what it is right now. And that's why I knew that since I included the curve distribution and this guy, that in fairness, I had to say one is coming later. Um, so you have 482 and 322. So that is 804. What do you have over here? Well, your distribution yield is 911, almost double, right? And that's not uncommon. Look here in the Tesla offerings from both. Their distribution yield, assuming the 36 payment, they're 1233 to 1120. It's not that much more, right? And they're only, but it's enough because these guys are close. When it gets really ugly, it's hard to distinguish it no matter what fund you're in. All right. So 804 to 662. So how did you get that? You added minus 248. Okay, we didn't have any minuses over here. Our NAV was up 322 for the year. Their NAV over here for Neptly is down 248. So at the end of the day, that's what hurt them. They had triple, or no, they had double the yield. They just had a worse NAV. They went from a positive in curve to a negative. All right, so let's keep going. So it was 3 wins, and the third one is Apple. Appy versus Apply. Okay, so it's the best of worst. If you look at all of these, the only fund that has a positive total return from both funds year to date, right, with the ugliness going on, is the Netflix stock. 804 to 662. And that's really 2 months worth in a few days now that, well, you figured new distributions for these guys. All right. So 380 to 450 in Apple, the underlying Apple income funds from Kurv and Yieldmax. Just a little bit better over here. You have a smaller loss. So that best goes to Kurv. When you go to Goop and GUI, which oftentimes has been won by Curve, it's nice to see Yieldmax come back with their Google, although neither one are that great. Um, let's just look. Yeah. So you got a 3% distribution yield, and your distribution yield over here is only 397. So 4 to 3, if you want to look at it that way, 33% more. Uh, but your NAV only went down 12. So you went from like 14 down to 13 on GUI. And then on Amazon, you won that. So the Google underlying with the GUI and AMZ were won. Now, yeah, that's not a bad win because they do, in fact, went, Curve went from 32.27 to 28.7. And these guys went from 18 to 17, and then using that number um, to do the math. Whoops, did I get the divide on this? I get that value. Yeah, and then over here is where you do, sure. Divided by 32. All right, so everything is cool. I double checked these several times because I was building this part new again from the other sheet. And then here, it's back with a curve win, 440 to 668. So what do we have? We have a 349 distribution yield. Again, Yieldmax slightly higher, 4 to 3.5. Okay. And on this one where they won, they were 5.25 versus 3.5. All right. It's really here where the NAV in their MSFO went down almost 11% versus 8%. So the slight more yield, a 0.5% higher yield, wasn't enough to make up the almost 3% NAV greater loss. Hence, like a 2 point difference here. All right, guys, so that's what I got. Kudos to Yieldmax, at least in improving. Typically, it's 4 or 5 out of 6 that are going. I've even had scenarios where it's 6 out of 6 where they've been won, okay, as the best by Kurv. So this is 4 to 2, very possibly 3 to 3 on this. So I'll keep you guys abreast. But when I say Kurv is good, I do think Kurv is good. They don't have anywhere the plethora of offerings that Yieldmax has, but I think they're a little more risk adverse. I mean, when markets get ugly, I'll tell you the one thing that I owned and I'm up big on now, although it did pull back when the Nasdaq came back some, is UVIX, which is playing the VIX. When these markets start to sell off, you want to be in some kind of defensive. And the VIX, I buy UVIX, which is a 2x on the VIX, and that thing moves. I mean, it was up 17, 18% early in the morning, went back to around 15. I don't even know what the daily was. Let me pop that up and I'll tell you guys. There's a few a few VIX offerings. UVIX is a 2x, so it's not something I just hold forever. Yeah, it only ended up being up 4.74, but it opened and it closed at 38.64, but it was up to 44.36. So it was 17, 18, 19. By the time I looked at it, it was around 43 and it was up over 16%. Um, but I'm holding it. This is the kind of thing I'm using. And there are calls, like I'll sell calls against my shares because the calls have huge premium. I was trying to sell a 57 call out to June and get $17, and it was trading around 14. But with it pulling back, I imagine it's back to 10. But all it takes is a rush up. Just look at a chart on UVIX, and you look here, it went to like 200 back in August. So when these things get very scary, VIX shoots up. It doesn't last very long. You have to have an order in. If you're setting and you're busy at work or something, I leave my orders in. Like I said, I was trying to sell 1/3 of my position and it didn't quite get there. And then I was trying to sell some calls. I was trying to sell some June calls and some September calls. In the case of September, I was trying to get $30. So it's as much as what I paid for the underlying. So if I get the 30 and VIX just the markets go up great, I make money on my portfolio. But if and then I don't care. I just let the call expire worthless. Okay, guys, so a covered call is what I was trying to sell. All right, guys, that's it for Kurv. Have a good one. This is Bruce, not a financial advisor. Have a great day ahead. It's not financial advice. Bye for now.